Hey everybody, how's it going today? I hope all's well. I want to thank everybody and welcome you to the first show we're going to actually put up on the channel today. It's quite a day for us, and I can't tell you how excited and nervous and all of the things that go with it that I am. The level of support we've gotten before we even put up our first video, I just got to say, is completely overwhelming. I got to thank my good friend Greg Manarino for kind of not only pushing me to do this, but helping me promote it by introducing me to his subscribers. My partner and good friend Jordan Dove for putting, actually that was a test video you guys got the pleasure of seeing yesterday, but for putting that out. It was really turned out to be very helpful for us. We started getting comments on things right away. And some of the stuff that I talked about in that video yesterday, I'll be talking about today. And also I'd like to thank all of you for taking the word of Jordan and Greg and subscribing without even seeing the video or knowing what I have to say. I hope that this blog meets what your expectations are. I hope it's useful to you, and I hope it can help you to reach your goals, not only in finance and building wealth, but just in having a good quality of life. So let's start the show, and the first thing we're going to talk about today are our friends at the Federal Reserve. As everybody's probably already aware, they had a 3/4 of a point increase yesterday into the Fed funds rate, taking that rate up to 1.75%. The rate was pretty much at zero at the beginning of the year, so it's been quite a climb. The rate is just, because of where it is already, it's starting to ripple through the economy. You know, I'm a mortgage broker here in Las Vegas, and I've already seen the results of it. You know, the climb in mortgage rates on my business specifically. It's just amazing how many people now are priced out of this market. You know, we see the double whiplash. It's always the guy in the middle class, the guy in the middle that takes the brunt of all this stuff. You know, so look at it like this. I have clients who are pre-qualified to buy a house. They got good credit, they have money for a down payment, but they couldn't buy a house because houses in Vegas are selling for $25,000 over appraised, which is insanity. And now that that's gone away, these same people still can't buy a house because rates have increased so much they can't qualify for the loan anymore. So it's just as usual, the guy in the middle takes the brunt of it. And this is just the very beginning of these rate increases. You know, I anticipate that before it's over, the 10-year rate could very well be double from where it is now, which is going to be kind of a jolt to everybody. And let's just face it, our friends at the Fed, as professional and educated and wonderful people as they are, they've already demonstrated that they basically have no clue what the hell they're doing. If you look at what the history of this, okay, so when inflation first started coming, what was the message? Well, it's transitory, it's not going to stay long, it's because of supply chains. And not only did the Federal Reserve say this stuff, the Treasury Secretary, who happens to be an ex-chairman of the Federal Reserve, was also spouting the same nonsense. Of course, that's political more than practical, right? So they came out, Chairman Powell, less than 3 weeks ago, and said that the Fed wasn't even considering raising rates more than 0.5 point this month. And yet yesterday, what did they do? They raised rates 3/4 of a point. Further evidence that this thing is bigger than they want to admit. Further evidence that they really just don't have much in the toolbox to tackle this with. And when you tack on this unwinding that they're talking about, you know, the Federal Reserve is holding, I think the number, I want to correct me if I'm wrong, but I want to say the number is around $9 trillion worth of debt instruments that they're planning on starting to unwind and lower their holdings. But how are you going to do that? How are you going to unleash that amount of money into the debt market and not expect it to make the market move? It's impossible. It doesn't work. There's just so many things coming out of this. The Fed just doesn't know what the hell they're doing. And it's going to lead to a bad outcome, because the only way they're really going to cure this inflation and the practical end to all of the things they're going to do is they're going to cause a giant recession. And now you're going to see the worst of it, because you're going to still have inflation, But you're going to add that in with a recession and job losses and people's standard of living coming down. And I tell you right now, if you're in the leisure stocks, if you're in casinos, if you're in hotels, if you're in cruises, if you're in travel homes and boats and that kind of stuff, get out now. Get out while you can, because the end is coming for that stuff. The Fed, they just don't have a clue on how to deal with this. I think that next month we'll see another 3/4 point increase. So you'll be looking at 2.5% up from 0. Now here's today's Wall Street Journal. You can see this is going back to 1990 roughly, the history of rates and how they've been working them. And you can see, even though there's some bumps in this, the trend has been down, 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 right? And the most shocking thing about these is this. See this line across the bottom, this line across the bottom? These are basically years of 0% interest rates. And then they wonder, oh my God, why are we having inflation? Well, when you devalue money and you make credit so easy to obtain and use, people are going to spend. When they spend, it creates, of course, that's the demand side. And if there's any little glitch at all in the supply side, you see what we're seeing here. So I tell you this, guys, don't believe a word you're hearing from the Federal Reserve, from the Treasury, from politicians, from talking heads on the radio, and all these guys, because they all have an agenda. Either they're trying to sell you something, they want to keep you in the market, or in the case of the government and the Fed, they just don't want to have a panic. If they really admitted what the state of things really are, it would accelerate things and add to an even worse crashing ending. So we'll see where this all goes, but it's just not going to be pretty. It just isn't. The markets today, another day of bloodbath, continuing the trend down. You're going to have your days where the market rallies and the market comes up, but if you take a good look at the chart, the trend now is down, and it's going to continue down. The market cannot, when you have a recession, earnings go down, the stock market follows. And when you have the sentiment in the market where people feel like today is worse than yesterday, and tomorrow will likely be worse than today, it's hard to end up with a big rally in the markets. It's just not going to happen. You're going to have a big downside, but the good news is there's some stuff you can do to protect yourself. I'm strongly recommending that if you're a sensible investor and you really have any kind of aversion at all to risk, it's time to get yourself in a little bit more defensive posture. It's time to adjust your portfolio and make it as close to recession-proof as you can. So how do I do that? What do I do? First thing I would tell you, and both Jordan and Greg have been saying this as well, it's time to buy into the commodities market. In an inflationary time, especially a recessionary inflationary time, hard assets are what you want to be holding. Now there is a caveat with precious metals, because as the Fed raises rates, that tends to strengthen the dollar. Yesterday the dollar index was at 105, and that's why you haven't seen a giant rally in gold and silver yet. Now that probably will come down the road, but not right away. The commodities I'm talking about, you're going to hear about lumber, you're going to hear about wheat, you're going to hear about pork bellies and orange juice and all that stuff that is going up like crazy at the supermarket. As these gas prices go up, that makes the cost of transportation go up, which raises the cost of everything that gets trucked or flown or however it's transported in this country. So the prices are going to continue to rise. The prices on everything except stocks, okay? So think about hard assets, think about a mutual fund or an ETF that's invested in commodities. That's a good way to get some money. It may not be a giant return for you, but it's a good way to protect your funds, to kind of keep you have a chance where you have a chance to go up and way less of a chance to be having these big drops we're going to see in the market. Another way to protect yourself is to buy preferred stocks. Now this is kind of weird for most people, because most people don't think of preferred stocks. They're pretty conservative. They don't kind of gyrate around. The prices don't go up and down, So hard assets are where you want to be. And you want to try to get away from the paper asset stuff, because that's going to be worth what paper's worth. And some of the more speculative stuff, I know guys are having a love affair with cryptos right now and some other speculative stuff. I just tell you, be very cautious with that, especially if your portfolio isn't colossal already. And if you have a lot of money and put away and you want to do some spec stuff that you can afford to lose that money, that's one thing. If you have a large portion of your wealth in these cryptocurrencies, be cautious with it. Because I got a feeling that the decline in that is not finished yet either. So what we have here, and forgive my French here, is basically the perfect shitstorm of all bad stuff. You got a giant inflation going on, making everything less affordable. People are going crazy. They come to my office, they tell me, Chuck, I was paying $1,200 a month for my rent. My lease is up, now my landlord wants $1,900. Can I buy a house? They can't even pay rent. The median rent in Vegas now is $1,850. It's just unsustainable. People can't afford to put gas in their car. The grocery stores have struggled. Taking care of their kids, everything's just going to get more and more expensive. Then you add in the geopolitical stuff. You know, you got a war right now in the Ukraine that could lead ultimately to World War III. I mean, let's face it, our government is not exactly being discreet in the way we're helping them, Ukraine, fight Russia. Now, I'm not criticizing what we're doing, but I'm criticizing the method that they're doing it. Do we really need to let them know that it was U.S. intelligence that enabled them to, blow up that boat in the Black Sea, or to kill Russian generals, or what weapons we're shipping and how much of it? How is that benefiting the war effort? I don't get it. So you got geopolitics that are a giant mess. You got a weak and crappy and ineffective government that I promise you, my friends, is not coming to the rescue. They're just not. They have no idea what to do. They're as divided as you can be. All they can do is point fingers at each other. There is no knight in shining armor coming to help you. There is no cowboy in a white hat. It's going to be up to you to protect yourself and your family and preserve what you can of your wealth, so that when this storm goes by, you're prepared to take advantage of the opportunities. Then you add in the people in this country. The people in this country are so spoiled and have never been more divided, more angry. Anybody that drives in this country these days has seen the amount of road rage on the roads these days. In Vegas, it's rampant. They're literally shooting each other on the freeways. So you got people divided. How does that make coming together and coming up with good solutions happen when everything is just all over the place? It's just going to be, again, a very, very bad ending. And then to finish it off, you have all the policies of the government rigged to help the wealthy. So again, I say, the middle class guy, me, Joe Sixpack, Charlie Schmuckatelli, guess what, guys? We're on our own. The rich are going to have their friends. The poor are going to have their friends. We only have what we know and can do. That's it. It's up to us. So I tell you, it's time to get defensive in your portfolio. It's time to think more preservation of capital, preserving what you have, than trying to find big returns right now. Truthfully, a zero return is better than a loss. And the smartest guy I ever knew once told me that the definition of risk is probable loss. So keep that in mind as you make your decisions. It's going to be a very, very difficult time, and you want to make sure that you adjust your portfolio. You get rid of anything that's interest bearing. If you're holding bonds or mutual funds that are in bonds, you need to get rid of that right away, because all of that is going to lose value as rates increase. You've probably already taken a loss if those are the kind of assets you're holding. What we have here, my friends, is very simply the end of an era. The easy money era we've enjoyed over the past 40 years with low interest rates and money sloshing around, it's led to where we are. It's led to this giant inflation, and now it's time for us to clean up our mess and get on with our lives. I really appreciate you taking the time to watch this video. I hope it was helpful and informative. I know I tend to kind of ramble and not always think in a straight line. As I'm talking, I'm thinking as I'm speaking, and sometimes it doesn't all come out straight. Understand that I'm talking to a person. I'm talking to a group of people. So this talking to a camera is a little bit different for me right now, but I promise you I'm going to get better at it every single day. I really appreciate you taking the time to watch the video. I hope you enjoyed it. Don't forget to like, share, comment if you have any questions or anything you'd like me to talk a little bit about, your specific portfolio or situation. And of course, if you haven't already, subscribe to the channel. We're going to be coming out with a video every day around 1:30 after the close of the markets to kind of keep you informed on what's happening that day. We're also going to add in a little bit of wisdom from the smartest guy I ever knew about how to build wealth and have a good, happy, wealthy life. We're looking forward to being friends for a long, long time. I look forward to hearing from you in comments. Like and share. Have a great day. See you tomorrow.